Hello, friends. This is Giuliano, and it's time for another BTC update, dump update. That's right, and it is Thursday. It is 24th of February. Now let's take a look at the price charts. We're going to take multiple time frames and look at this dump update from a few different time frames. Okay, so let's jump right into it. Sharing the screen. All right. Well, what do we have here? We have a BTC monthly price chart. To really get a better handle of things, we'd have to look at a bigger set of all of the moves, the waves, and see what's going on. But for now, we're speculating here, the corrective move. Could it be a C wave of a flat pattern? What is happening here? We don't know. But that doesn't really matter so much as what we can take for now is we're moving at that 20-month moving average. Okay, we're moving around that price level. Okay, on a monthly price chart, that's a big level to be flirting with. Okay, so we want to watch to see what happens in this next month or two. I mean, it won't give us much time if it's going to dump. Like it's going to get a big hard dump, but maybe more similar to this, there will be a lot of buying support if it does go below the 20-month moving average, much more in February, and if at all in March. Okay, it's very possible. But anyway, flirting with that 20-month moving average, that's the monthly chart. And the other thing I wanted to show you is on the monthly chart, potentially building some hidden bullish divergence here with the MACD. The histogram here, potentially building some hidden bullish divergence as we have the, let's just show it to you. This is the price action back here from 2020, okay? March of 2020, that time frame. And now we are over here in 2022, February of 2022. And so there you go, some potential bullish indication here. So that'll be what'll happen is if it flirts at this 20-period average, a 20-month moving average, and eventually lifts away from there to the upside, then this will prove to be that hidden bullish divergence that it was signaling. And if it doesn't do that and if things change, then I guess, just depending on the trend, the indicator doesn't always work in your favor, is my understanding of things. So anyway, there you go. So that's on the monthly. Now, let's turn it to the weekly where we have a lot more data here. We have the Ichimoku Cloud now coming into play, okay? Firstly, we have a 200-week moving average all the way down at 20,000 now, 200-week moving average. Let's check these indicators. Let's slide them down. Well, on this case here, we are so far having convergence, I believe, with the potential here, A and C wave. So far, it's converging with the movement in the histograms, and relatively diverging here with the RSI, but nothing is oversold yet, so it's not, nothing really strong in terms of those signals I would see here from that. But what we are getting on a weekly is an interesting movement here. We're getting our third red candle in a row. Okay, that's important because generally 3 candles in a row is enough, at least for an intermediate time frame. But as a general move, when the move is really strong to one side or the other, you might get a whole bunch of the same color. But overall, I think this looks pretty healthy. And so we could probably finish the week off around here. Does it wick below somewhere? Maybe. But we are right at the bottom of this Ichimoku Cloud layer. And on a closing basis, we are fit with that channel for a potential flat pattern. But in that case, if it does end here, then we would expect some sort of next move X wave that combines into a more complex correction. But generally here, I don't think things are finished yet, although it's tough to say. But as we go into lower time frames, it starts to look like we should be playing out with more time here, terminating, maybe, you know, going longer than this first wave here and this potential third wave here. Now on a monthly, on a closing factor, these prices don't really show all of the action. Like the price level down here in November makes a difference, okay? And that's why we'll play with that type of level, especially when we go on to the daily. But the basic idea here is that we're in some sort of impulsion where now we are potentially moving into the terminal wave. And this would be the first leg of the terminal wave here that we'd be currently making from top to bottom. So interestingly, that's where we are now. This is not finished, this candle. So we have many days to continue. We have the entire Thursday, Friday, Saturday, and Sunday. So more than half the week. Not the entire Thursday, but you know, 19 hours of it roughly. So let's go into that daily candle. So currently we are looking at this big dumping red candle. So is that the beginning of the next part of this move? Well, if it closes down here, then yes, we can expect probably something lower. So what's happening here on the daily? Let's get maximum. No divergence is really forming of note yet. Not that I can see, but maybe if you look more closely, could start to play. Let's see, we'll just start playing with this idea here. So yeah, you could say we are diverging here. We're getting some daily divergence bullish potentially here with the MACD if the price can stay above these previous levels here. Interestingly, you know, this, I guess this line, this sloping line, the red ones, was drawn based on just a percentage. So it doesn't have to stay here. But if we want to take this third wave here, top to bottom, and compare it with the fourth wave, interestingly, it's something like this. Oops, it's something around there. But anyway, it's about 61.8% of the move. You know, I'm taking it from the strong fast move here, and I'm taking it from the strong fast move here. And yeah, I mean, that's why I collected them like that, and I allowed the final move here to be about 78.6%, somewhere in there. I mean, this is just a rough chopping, but that would potentially be a pathway. None of this is guaranteed, right? I don't know. Also, is this here? Let's just label them for now. Potentially. Oh, did I do an ABC pattern? I did. I meant to do an ABCDE pattern, although it would be like a 1, 2, 3, 4, 5 pattern. So why don't we really give it the on the 4 hour we have it labeled. So we'll go there. We'll go there. I just wanted to recognize that potential, like the reason I'm thinking like this is, okay, we have this kind of 61.8 level. We're thinking maybe overall, firstly, that this fifth wave it kind of needs to be shorter than this third wave. Otherwise, because this first wave would be not the ideal length compared to the third. But anyway, this whole move here is not being easy for us. This is the big leagues, as they call them. So what we're trying to do is just basically fit our understanding together. And so we have a roughly 61.8%. And if we were to compare this third wave with this potential whole fifth wave, you see, you might have seen before, and I'll show again that the 78.6% is roughly there, like at the bottom of this box. So when we start playing with that type of level, who knows if this comes down here or how it works, okay? But we can look on the 4 hourly, it's a bit more like that, but you know, where it's actually lower down. So we'll take a look there. But basically, here's the idea. You know, we have a roughly 61.8 level. It matches nicely with this previous support level. So if it can bounce off of here, then it makes a move up to here. roughly. You know, maybe it's over here where the cloud is, something like that. Maybe if it's even up here, we'll see what happens. But probably, you know, it might play with this 20-day moving average. So I don't know exactly where it will be. But eventually the idea is that it would be playing with some sort this 2 to 4 trend line as well. At some point, it would probably be riding it and maybe even getting out of it. So who knows how long this fifth wave would be. Once we start getting a turnaround, we can start looking at this, but I've measured it basically that it would have some alternation between an A, a C, and then also a B and a D, and also the D and the E. And there, that would be price and time relationships around the 68, 61.8. But that makes it really contract a lot more in terms of the time and the price. And we'll see what ends up happening here. But there you go. This brings us to about May timeframe. Again, none of it is exact, but it's more so the concept of it. Okay. And so yes, like I said, as we see this potential A wave turning around, I don't know when that's going to be. Maybe it needs to bounce. Maybe it needs to do a bit of a dance around here. Maybe it needs to go lower. This could be just the beginning. We might just be seeing the beginning of the next leg of this, you know, maybe ABC type of a move. But anyway, we're going to see how this candle finishes off. That'll tell us a lot. Also, it's at the lower end of the Bollinger Band. So if it's going to keep going, then yeah, that makes sense. It's going to just really start getting volatile more than it already has. Well, we'll see. I'm liking this so far. It's looking good. So far, so good. No complaints yet, right? And we'll adjust as we go. So that's that. Okay. So that's a daily time frame. Daily time frame is looking pretty good. And we're going to see how this whole thing plays out. Like I said, we're going to see it maybe hugging this overall 2 to 4 type of trend line here. And it hugs it here and here, and then eventually leaves away. We'll see, though. It's going to be interesting to watch as we've now come back into that original 0 to 2 trend line. You know, that's quite fascinating. So there you have it, that original 0 to 2 trend line. Okay, so that's what it looks like. And remember, we're at the bottom of the Ichimoku Cloud here. We can probably wind our way through that cloud a little bit. So we're going to see how that works. And that, as a reminder, is this. So we could probably wind our way through here. And then at this point, we could make the next move towards the 20-week moving average, wherever that will be around this time frame. So anyway, that's cool. That's, again, these are just speculations, and none of this is exact, but that's just what's making a lot of sense right now. So, and again, yeah, I could see price wicking below the cloud for sure. I mean, it doesn't have to be contained in the cloud, that's for sure. And there is always the other chance that we are actually going down towards this 200 weekly moving average, and that's just what it is, and that's possible. Okay, but so far we're playing with this. We're going into the 4-hourly. So on the 4-hourly, just to recap, we had that 1, that 2, that 3, that 4, which is an ABC likely. And in this ABC, we had just this simple wave here, then this more complex wave here. And in terms of subdivided, not more complex, but more subdivided. And also more time consuming. And then here we had a more extended and subdivided wave C. And if we're beginning the next move here, then what we're looking for is on this wave C, we want this 0 to B trend line to be broken faster than it took to make the wave C. So this amount of time here from here to here should be longer than it takes to break this 0 to B trend line. It happened. You can see how fast it moved down and broke it. Okay, I'm counting from here. And you can see then that this would have been a failed like fifth wave or something like that. You know, we would have had some sort of a 1, 2, 3, 4, and a 5. Okay, something like that. Anyway, for the C wave. So now, in this case, regardless here, we've broken the 0 to B trend line. The next confirmation stage would be to break this level here, which relates here to where the C wave begins roughly. Okay, C wave begins here, or you could argue that it begins here, but you want to break this where the 0 to B trend line has its touch point. The amount of time it takes to make the C. Okay, you need to break below this line here in less time than that. So let's see how much time did it take. And I'm pretty sure it took less time, but let's just go right here and say started here. We might even have had a fifth failed wave within this small fifth wave. But anyway, let's just play from around that time frame. And there you go. It was roughly 61.8% of the time that it took to break down. I mean, you could argue it only took half the time here to touch, but that's arguable. You know, you didn't reach lower than here and blah, blah, blah. I don't know. I don't know all the rules of everything so precisely, but it makes sense. And we were expecting a breakdown below this level, and that's what we're getting right now. And on a 4-hour time frame, I mean, this Bollinger Band has been decimated. It's been gaped right here, and we're going to see what kind of repair we receive. My guess is wherever it's going to end, it'll probably bounce back in as the Bollinger Band repairs, and we'll see what it looks like. But anyway, so that's where we are. And it's roughly at about, wow, back in the 34,000 range, you know, right down here at this price level. And then is this some sort of deviation? We'll see. In this wave though, could be giving us more. This is just the recent price action. We also have price action from back in June, July, August that could come into play. But again, I think Ichimoku Cloud on the weekly is a good level. We could still wick below, but this seems like a good closing level. Yeah, seems like a good closing level for the week, and we'll go from there. But anyway, that's where we are. Okay, interesting. I'm going to get rid of the 0 to B trend line. I'm going to get rid of this lateral line here because we have completed them. Okay, I'm going to get rid of this ABC for now. We don't really need it there. And I'm going to get rid of this horizontal line for now, although it is a nice line for deviations, but that's not a big deal right now. We're not using this for trading. So there you go. All right. That's about it. I don't really have much else to say other than this is again that potential pathway. In this one, the wave goes even lower than that box. This is about the 78.6, right? That this 5 is about 78.6. So we'll see. We'll 78.6. I mean of this three wave here, this would be about 78.6% of it in terms of the distance. Okay, that makes sense. Okay. See that? Cool. All right, there you go. And that's around like 31K, whatever that is. Doesn't matter. You can check yourself. Okay. I think that's it for BTC dump update. I am complete. We went down to the 4-hourly. I don't really need to go down too deep. I don't think. Maybe we'll check a 1 hour just for the fun of it before we end this. And yeah, could continue, could finish. It's really stretching that Bollinger Band, and we'll see. We'll see what ends up happening. But oh, that's what I wanted to look at was any sense of divergence or. So we're gonna take a look here. Nothing yet in terms. I mean, if you want to take a longer time frame from here, but that doesn't really make sense. So we're going to watch for divergence to form, and then that will be a better signal on the 1 hour. And then on the 4 hour, On the 4 hour, no, it's converging here. We're making a lower histogram, and I bet you we are making, yep, a lower price. So not yet, no divergence yet on the 4 hourly. However, we are making it in towards the oversold area, and yeah, that's what we're waiting for, is to find the divergence. Okay, that'll be happening here within this next few days here as the week closes out. So you might get some move up, some move down, whatever. It'll probably hang around this zone here, this region. All right. Yeah, so that's it. I think I'm done for now. Good. Well, I'm wishing you very well, and we'll close it out with the daily price chart. There is that candle, and I hope you stick around for more. I'll be back, and that's it. Giuliano, until next time, I'm wishing you love, peace, and happiness. All right. Goodbye.